Okay, I think we're going to get started here. A couple of people are breaking from other sessions that they are coming in for. But in the interest of introducing, this is a very important session. This is the to describe and also perhaps to brief Minister Steinitz a little bit about our progress over the last 3 days. As part of the general content, Israel is deployed throughout the conference on panels that concern water technology, global capital markets, health, education. There were so many different areas in which the experience of Israel as a global laboratory was involved and engaged in the broad content. Also, we had a track that dealt with a number of very specific projects that we're working on in Israel with our colleagues at the various ministries and the like. And we had this morning started off at 7 a.m. with a panel that was discussing social investment, one of the decisions by the government to establish a social investment fund. There was a session that dealt earlier with issues about energy and gas and all the questions about gas technology, areas that are concerned of that. A masterful session about Israel as the ingenuity of Israel as a global laboratory for launching new products and global collaborations, of Israel as a solution that as it dealt with its problems of scarcity and of bridging gaps within the country and also gaps between itself and the rest of the world in Africa and in Asia and in many other countries of the world. It's also just a brief time to introduce our panel that also had been doing other briefing sessions and been hard working during the week. Professor Oded Sarig, who'd engaged with an economic update, along with Professor Shmuel Hauser from the Commissioner of Capital Markets, Insurance and Savings at the Ministry of Environment, Minister Steinitz's former ministry, and Professor Shmuel Hauser, a great colleague of all of us that are in financial economics, who heads up the Israel Securities Authority. And then we will also be hearing from David Gershon, who's a financial technology innovator out of Tel Aviv, but operating globally with his company in Superderivatives. And then Levin returns with us, as she's been on some of our other panels, as the deputy CEO of Bank Hapoalim, larger banks in the country, the largest bank in the country, and also is engaged in many of the policy issues that we as an institute are. Just very briefly to run through this, as many of you know, we have 18 of our fellows. I want the fellows to raise up their hands real quick. They're deployed in the Ministry of Finance and the Ministry of Environmental Affairs, at the President's Office, at the National Economic Council. And they go to work every day, though we're authorized by the Civil Service Commission in Israel to place these apprentices and these interns there. They don't actually work, but they work pretty hard. But there's 3 ways that we work: with our fellows programs, with the financial innovations labs that we do that cover a range of issues. One being the life sciences industry, that was clearly one. Yuval, who was the chief of staff of the minister, and was key at that during the time he was at the finance ministry, an interministerial agreement between the budget office and the chief scientist to leverage private and public partnership to build out the life sciences industry. Another one that came through during the time that Minister Steinitz was the finance minister was working on eliminating global oil dependency as a transportation fuel, the creation of the alternatives fuel. That was a lab. We had a lab here 2 years ago on the Sovereign Wealth Fund. That's worked its way through. The legislation's been passed. That's also, gas started flowing just 2 weeks ago, I guess. And the idea of having a sovereign capital fund in Israel, which has huge intergenerational transfers of wealth implications. Work we've done with the ministry and the General Accountant's Office and the Ministry of Environment on the green revolution, on green growth, on trying to build out the infrastructure for recycling. And then after the protest a couple of years ago, the idea of looking at social investment and creating a social capital market. We report these things out oftentimes at the Globes conference. Anat Weiss is here and Chagai Golan is here from Globes, where we discuss global capital markets, impact investment. Was that panel, the Green Growth panel, where our fellows worked out on those issues. And those are the kinds of ideas that we work on. I'm going to turn this over quickly to Minister Steinitz, who has really been an important leader in these last 4 years navigating through the global economic crisis and has transitioned to another areas of security. But we wanted to ask him to open this panel and ask him to add a few words.
Thank you
for joining us.
Thank you. It's a pleasure to be here, and thank you everybody for attending. this room, this meeting, to do with Israeli economy and especially with investments in Israel. I think that investments, especially investments in the real economy, is the most important way to develop the economy always, but also more so in time of crisis like the global crisis of the last 4 years. Actually, you have two ways to handle such a global crisis. One is to try to sustain economic activity, and one is trying to increase economic activity or to develop the economy further on into the future, and this can be done only through attracting more and more investments. Just to give you the figures, in 2009 investments, I'll speak only on investment now in the direct investment in the real economy, in fixed assets, but of course investment in the capital markets is one very important way in the end to grow the economy and to bring also the development of the real economy. In 2009, investments in the real economy in Israel went down following the crisis 6%. In Israel, unemployment rose almost to 10%. There was negative economic growth at the beginning of 2009. Things look very gloomy. Since the beginning of 2010 until today, the level of investments in the real economy in Israel rose by almost 40%. Almost 40% in comparison to 2009. If you compare it to 2008, around 34%. This is a dramatic increase in investments in comparison to most other Western developed states. And it was achieved despite of the global crisis. In the middle of the global crisis, it's helped us to create more jobs per capita than any other developed countries to overcome the crisis with significant economic growth, with significant job creation. And this was, not many people are aware of it. People are aware that Israel did handle the crisis relatively good, but not many people are aware that the main factor was this dramatic jump, dramatic increase in investments, mainly in the real economy. Now, when we speak about Israel and about investments, you usually think of three important things: technology, economy, and security. So let me say a few words about the three subjects, the three issues. First, about technology, I'll simply tell you a story. At the beginning of 2010, I decided to pay a visit to China with a big delegation. And my main purpose was both to increase the Israeli export to China, but more important still, to open Israel for Chinese investments or investors, or to encourage China to allow and to encourage investments in Israel, as another mean to increase investments in Israel, and by these two, try to overcome the global crisis. So I went to China, and before I went to Beijing, I moved to Shanghai to open the Israeli pavilion at the expo in Shanghai. And I brought with me the manuscript of Einstein's theory on relativity, the most important manuscript, the most important scientific article of the 20th century. Because I heard that Einstein is the most admired figure in China. And suddenly it occurred to my mind that we have all the manuscript. Einstein donated it to the Hebrew University of Jerusalem. I sent one of my assistants, Yuval Volman, where he is here. One day before our departure, he brought the article, the manuscript, and you see very clearly in the middle, it is in Einstein handwritings in German. But in the middle, you see an open room, and in the middle is a famous formula, E equal mc squared. And I presented it at the expo. And I told the Chinese that we can transform this scientific formula also to the field of economy. And to try to explain with it why it's important to Chinese companies and to the Chinese economy in general to invest in Israel, in little Israel. So I told them like this, and it was broadcasted in the Chinese TV, and told him, look, in order to have a growing, a strong economy, you have to have three elements. E, which is energy. China needs a lot of energy. M, which is mass, stand for mass, yeah. Mass of producers, mass of consumers, yeah. You have to sell your goods. You have to have big markets. And C is the speed of light. And in Jewish tradition, light stands also for wisdom, yeah, enlightenment, wisdom, and so on and so forth. Said, now look about Israel. E, you are looking for energy, although we found some gas fields. If you need energy, you have to go to the Arab world or to Mexico or to yourself or to Brazil, and not necessarily to Israel. M, massive markets. We are only 7 million people. You have to look to the United States, to Europe, to yourself, to India, to Japan. But little Israel, the sea, yeah, the speed of light, said here we have something to contribute despite our little sizes. Wisdom, the creativity of the Israeli engineers, of the Israeli entrepreneurs, of the Israeli scientists is very well known, and you need this as well if you want to sustain economic growth and to become a world leader. You have to be on the front in science, in technology, in thinking, in creativity. The C is square. We have here something to contribute, and therefore so many Americans and European companies are well invested in Israel, especially in the high-tech, but not only. And the result was that the Chinese finance minister and also the current prime minister, Li Ka-shing, who was deputy prime minister, gave clearly a green line in a news conference later on in Beijing. They were totally convinced, said that the Chinese government is giving green line, and from now on, Chinese companies are encouraged to invest in Israel. The result was that part of this dramatic increase in investment in Israel came also from China, between 20 to 25 billion shekels, which amounts to $7-8 billion, were invested by Chinese companies in Israel in the last 2.5 years. Before of that, it was almost zero, literally zero. So this is to speak about technology. But now I want to speak about security and about economy. And by this, I will conclude and deliver to the panel, to the very good panel of such 4 fine experts. Many people ask themselves about security. Israel is sitting in the middle of the Middle East. The Middle East is the most difficult neighborhood on the face of Earth, and especially in the last 2 years of the Arab Spring and the Iranian nuclear threat, which is advancing from day to day. Why to invest in such a little country in the middle of the most dangerous, maybe, neighborhood on the face of Earth? So I will address it shortly. First, I think that those who already invested in Israel 10 years ago, 20 years ago, 30 years ago, ask Warren Buffett, who just spent another $2 billion yesterday in order to complete the acquisition of his car. Ask Intel, ask IBM, ask Motorola or Cisco, HP or Microsoft, all the companies that, or most of them, that invested in Israel heavily in the past 10 years or 20 years ago, if you check over the decades, are very satisfied with the results, despite all the problems, despite the animosities, despite sometimes terrorist attacks, despite some armed conflict that we have known for the last 2 or 3 decades. Experience will tell you that usually it's a very good investment. Now there should be an explanation to it, and the explanation is that although the Israeli economy can suffer from economic crises that are created either by global economic crisis or by security problems, and this happened once and again, the Israeli economy has shown itself to be very flexible and resilient, and the recovery is usually very, very speedy recovery. Just to give two examples, for the last decade, in 2006 we had the Second Lebanese War. Third of Israel was totally paralyzed for 1 month under very strong barrages of missiles coming from Lebanon. It did cause negative economic growth for several months, but the recovery was very strong and very speedy. The same happened with the current global crisis. At the end of 2008, beginning of 2009, we have no negative economic growth. Unemployment get closer to 10%, 9.5% in 2009. Beginning in 2010, we had known very strong and speedy recovery. And for the last 3 years, the Israeli economy is growing faster than any other Western economy, producing more jobs per capita, and so on and so forth. So the Israeli economy, the little Israeli economy, maybe is so experienced with crisis that it's not that a crisis that is totally immune from crisis, but very rapid recovery. It takes some time, but very strong and rapid recovery always. And this is, of course, does matter. The last thing that I want to touch, and this is very important, is the field of economy. Because, of course, the economic conditions, the economic atmosphere is very, very important here. And I must tell you, and now I'm speaking like a former finance minister as well, it is mandatory. It's extremely important. If we want to sustain the success of the Israeli economy of the last few years during this terrible global crisis, we have to keep very high level of investments. We have to keep investments on the current level or even to continue to increase them. Otherwise, the ramifications might be very negative. In order to achieve this, we have to do and to keep 3 things. First, we have to avoid overregulation that might depress investments and investors. This is extremely important. Secondly, there is a new trend in Israel of mocking and of populistic mood against investors, against profit, against too much extra profits. If the word profit will become, איך אומרים מילה גסה, negative, yeah, a negative word, this will be, the impact might be very negative, and we shouldn't give up to those populistic trends and to create anti-investing atmosphere, because atmosphere does matter. And the third thing that I'll mention, it's extremely important to continue to encourage investments. The law of enhancing investments, what we call חוק עידוד השקעות הון, the law of encouraging new investments, is extremely important. We shouldn't change it year by year. It's extremely important to sustain the current incentives for new investments, especially as, after all, we are Israel in the middle of the Middle East. If we will change those things, if we will give up about those things, we might risk Israel's economic success. I believe that we are clever enough, mature enough to understand this, and I believe that the atmosphere for new investments will continue to be positive. So those of you here that will listen now to the very important panel, please continue to consider investments in Israel. I'm confident that for the longer term, those who will continue to invest in Israel will find it very satisfying. Thank you very much.
Thank you very much, Minister Steinitz. My colleague Roger Stein, Dr. Roger Stein, is going to be moderating this panel. We're going to do a deep dive now into the problems and the issues that have to be faced to accelerate this investment rate.
Thank you. Is this mic on? Test. So that's an easy act to follow. I'll just start with a few opening comments to try to set the stage a little bit for this particular panel. The build name of the panel was the idea of bringing Israel from a startup economy to a kind of a mature capital markets economy. And we just heard a lot of good reasons to believe that there's a lot of investment opportunity. And yet when we look at the actual capital markets, they're not as mature as some capital markets in other places. Could I have slide 3? So if you look at this, that graph on the left-hand side, what that's showing is GDP growth. And just as we've been talking about over the last 5 or 6 years, Israel's enjoyed tremendous growth in GDP. That y-axis there is the GDP per capita. That's how efficiently the GDP is generated. And what you can see is Israel, among a lot of other peers, is way up in front, way up in exactly that sweet spot you'd want to be in. And most of that growth, if you look at the right-hand side, is coming from the service economy. And within the service economy, a lot of that's coming from financial services. So if we can go to slide 4, a lot of investment has been made and continues to be made. Israel leads the world in patents, and it also leads the OECD in investments as a percentage of GDP in research and development. And so that sort of leads to this, it's hard to have a panel like this and not talk about the startup economy. But if you go to the next slide, though, it turns out that a lot of that great innovation ends up becoming expatriated. What that graph on the left is showing is IPOs, and that's read off the left axis, which is a smaller axis. And the reddish line that you're looking at is M&A. That's typically foreign companies buying Israeli companies and then expatriating the IP along with most of the jobs and so forth. And one of the reasons for that is that a lot of the funding is coming from venture capital or private equity. And as you can see from the graph on the right, most of that is in the early stages. So at the most fruitful time, there's pressure to find funding, and that funding is typically not available. Now, traditionally, if I can go to slide 9, traditionally, that would be where capital markets would come in, equity issuance or issuance of debt. And what we can see is that in Israel, that does happen, but most of the debt and equity is being held locally. So those blue bars, or the blue bars on the left are equity, and the ones on the right are debt. And that little gray stuff up top, with the exception of 1 or 2 periods on the equity side, is what's actually coming in from the outside. So most of the capital markets activity is actually local. And it's a smaller market, and it's got some idiosyncratic issues associated with it. And that's really what this panel is more about. If you look at slide 8, the Milken Institute produces a bunch of research on what's called global attractiveness. And this is basically a measure that the Milken Institute and some colleagues have come up with, which talks about how attractive a market is globally for investment. And that graph on the right is just showing you that index on the x-axis, and then the amount of foreign direct investment on the y-axis. And you can see a really strong relationship there. On the left-hand side, what we're showing is how Israel stacks up relative to other countries with respect to the individual components. And you see Israel does great on all of these areas except for really 2. One is attractiveness to investors, and the second one is regulatory restrictiveness. A lot of that, if you dig into the numbers, a lot of that bar on attractiveness or ease of investment has to do with things like terrorism and things like that. And I'm going to skip over that for now. We just heard a bit about it. But if we go to slide 6, what we can see is there are some regulatory hurdles as well. The graph on the left is showing what's called the regulatory restrictiveness index. A high number is bad, a low number is good. Israel's in that blue bar, and those 2 lines are the industrialized countries and then sort of the rest of the world. And you see that from a regulatory perspective, Israel's falling somewhere in the middle. But that's not explaining the whole issue, because if you look at that graph on the left, what we're seeing there is, again, this type of an index. In this case, remember, a low value is good. And we're seeing on the y-axis, again, direct investment. And so where we see Israel is actually below that line, which suggests that even controlling for the amount of regulatory restrictiveness, there may still be some other issues, some frictions at play. And if we can go to slide 10, we can see that some of them may have to do with market microstructure. In terms of liquidity and some other features that investors like to see in capital markets, Israel's ranked relatively low compared to some other, in this case, equity markets. Now, the reason liquidity is important is it allows people to price accurately, but more importantly, it allows a certain type of investor to invest. There's only a certain class of investor that can afford to invest in illiquid investments. We typically think of insurance companies, pension funds, and maybe sovereign wealth funds. Those types of investors typically need very large chunks of equity or debt in order to satisfy their investment mandates, and in a small market, that's hard to find. So for the rest of this panel, what we're going to talk about is some of the background that's led to this, and possibly some of the solutions that might come out of it. I think we've all been introduced. Shmuel, if I could ask you maybe to start with some background on the state of the capital markets and what's going on in Israel now.
Okay, following Minister Steinitz, I just want to tell a little bit what happened in the last 4 years while you were Minister of Finance. The first thing I want to say is that Israel is a small economy, open to foreign economies, and is exposed to foreign economies and exposed to the risks that are associated with these economies. But I want to talk a little bit about the upside of the capital market in Israel in 2 minutes. The first slide, slide 55, is the one that was mentioned here. GDP, the growth in Israel relative to is quite high. It's higher in all those years, most of these years, higher than the OECD countries. The next slide, it is 56, shows you what happened in the stock market. The stock market is doing as well as other markets. In fact, it is even less volatile than most markets, even in extreme times when you compare it to the US economy and other economies in Europe. You'll find that it is doing as well, but it is less volatile. And this is in spite of the risk security issues that we are familiar with in Israel. One thing that is really surprising in slide 57 is that credit rating of debt in Israel is consistently increasing. In fact, I think it's one of the economies that did not suffer any reduction in terms of credit risk. The next slide is 58. It shows you that even if you take it from the beginning of 2007, the total assets of held by institutional investor doubled actually. And we're talking from the beginning, prior to the recession. During this period, and you see in slides 59, during this period, the amount of money that is invested outside of Israel is increasing. It's about 20%. It's a larger proportion than it used to be. And what it says is that there's a lot of money in Israel too that is looking for investments. The next slide that I want to end, at least for now, slide 60, shows you that the interest rate in Israel are low, trending down. But the nice thing about it, they are not as low as other countries, which provides also flexibility, monetary flexibility to the Central Bank of Israel, which allows a better way of going on supervising the capital market.
Thank you. Oded, I was wondering if you could talk a bit about some of the things that you're seeing, and in particular, some of the discussions that have arisen of possibly creating a financial hub inside Tel Aviv as a global financial hub.
Okay, well, let me begin before I start with the financial hub, which is important, with a point I want to emphasize and a change that is taking place in Israel, and I think it's important to put it in place before we talk about the financial hub. Israel is unique. If I wanted to be an American, I'd say it's quite unique. It's American, right? It's either unique or not, but Americans say it's quite unique, so it's quite unique.
Some Americans.
Some Americans would say. So it's quite unique. It has the demographics of a developing country. It has the infrastructure of a well-developed country. And I think the combination is a rarity, and it's important to understand what's going on in light of this. And to give you some pointers on this, I have a few slides. If I can have 41 up. The population is nearly 8 million. It's growing at the rate of 1.8%. Birth rate in Israel, it's standard, 3 kids, We take kids for granted. So 51% of the population are under 30. It's a young population. As a result of this, you have insurance pension savings that grow tremendously. You saw what happened. You saw the growth rate of the past, but this 9% is the projected growth rate of savings for the next decade and a half. So we're going to have capital markets that will more than double in the next 10 years. Okay? It's enormous. If you talk about not the demographics, which is the developing country characteristics, but the developed country, you have a modern corporate law. It's changing. One of the things that it's not a stable corporate law. We had several changes, but it is a modern corporate law structured by best trained people from scratch about 7 years ago. It's fabulous. It's nice. As a result of it, Israel is ranked number 6 in terms of investor protection in the World Index. It's like the US. Okay? So in terms of the legal infrastructure for investors, it's right at the top. And if you think how Israel is developed, we are homo cellular. We talk on the cell phone all the time. We have lots of cell phones, so the infrastructure for telecommunications is there. So the combination is demographics of a developing country, infrastructure of a developed country, and as a result, there are lots of things that can happen. In addition, we're at a junction where things are changing. There was a concentration committee, and the concentration committee made recommendations. It recommended to separate real financial assets. It recommended to flatten pyramid structures. Pyramid structures have existed in Israel for ages, and pyramids have problems associated with them. They separate ownership from control, and as a result, the recommendation was flatten pyramids. We're going to have that. And it talks about how public assets should be allotted to increase competition and prevent concentration of power. As a result of these 3 things that the committee recommended, we're going to have lots of opportunities to invest in Israel, coming at a time when Israel seems to be, relative to the global economy, an attractive place to invest. There will be folding of layers of pyramids. Lots of companies will have to be sold, bought. There will be opportunities. There will be separation of financial and real entities. So lots of financial entities will be up for grabs, and they are very advanced and sophisticated. And there will be deleveraging. Deleveraging is something that everybody wants the others to do, not in their own country. Because deleveraging essentially takes money out of the market and liquidity out of the market. It's going to happen in Israel too. We adopted Basel III regulations. And as a result, again, more companies will be out for sale to allow deleveraging to take place. So you take all these things together, it's an economy that is changing. It's at a point that is crucial. It's a major change in the economy. And it's such that its future guarantees that economic and demographic conditions will be interesting. Going back to your point, one of the things that Israel has tried to do is that the government tries to identify points in which there's a source of excellence, and it tries to build things. So we have superderivatives as one case in point, but the government identified the high-tech industry and the finance industry as something that can be combined to create a high-tech hub for financial innovation. And it's encouraging institutions globally to come to Israel with financial incentives, with building infrastructure, to create a hub that will allow development of sophisticated financial tools in Israel to create the ecosystem where people like to work together. Superderivatives is one case in point. I'm sure you're going to talk about it. It's on every Bloomberg. Virtually on every Bloomberg you can find. And Israel is very strong in high-frequency trading, which I'm sure Shmuel will talk about. It has the computers sit in New Jersey to be close to where everything is done, but the minds sit in Tel Aviv to create all the necessary structure.
So David, actually, maybe you'd like to talk a little bit about your experience 12 years ago starting up Superderivatives and how that experience plays out and how it might be different today.
Okay, so first of all, 12 years ago, the world was very different. And when I started Superderivatives, I lived in London, and I made the decision to have the R&D in Israel. And it was very, very difficult to find people in Israel that understood anything about the financial market and derivatives specifically. So the first few years of the company, we devoted a lot of time to train the people and educate them about the markets. And typically, in the first year, the R&D developers, spend more than a month studying options and financial markets. So, the percentage of, or the portion of the time that we devoted to educate people was actually very, very high. It paid off, of course, and people are very talented in Israel. So the investment is a very worthwhile investment. But definitely, there was a very big investment in educating people in Israel in a space that didn't really exist there. And I have to say that at the beginning, it took a lot of time for myself. I brought the knowledge to the company in the early years. But as the company became more known around the world, we started to have talents coming to Israel, people that made aliyah, made immigration to Israel from London and New York, and they knew about us, and they all sent us their resume. So very quickly, I would say in the third year, we started to collect very, very good talents from London and New York, and knowledge started to come into the company. And it started to feed itself, and they used to do the training, and basically we started to basically improve all the training mechanism. And even today, okay, when the company is quite mature, every employee on the sales side spend at least a month studying in a course. There is a new joiner course of a month. Everybody in the R&D has to spend at least 2 weeks at the beginning, and they have also a weekly session on their material. Everybody has their own field, so they have to get the weekly training. So you understand there is massive training when you want to have a company that is like cutting edge in something. And it's very different, I think, from other areas of technology where the knowledge here is so critical, and the investment that you need to do is so high.
So, I mean, if you think about the components that you need for an active financial economy, and let's say a hub, certainly the actual financial engineering technology and the financial infrastructure is part of it, but part of it is also efficient markets that function well, that can clear transactions in an orderly fashion. And you've had some experience with this. I wonder if you could talk a little bit about that.
Yeah, I'm happy to be the investor side of this panel, or the financial industry side of this panel. Well, before we dive into the question, how do we use the capital market as a source of funding to big companies, new big companies? And in my opinion, for example, the fact that Iskar wasn't traded on the local stock exchange is a question to be asked. Why it wasn't so? So we have to dive into 4 topics. A, what is the capital market and what is a marketplace? B, the liquidity. We'll talk about it in a minute. The structural change. I think Oded started to point out at that, and the regulatory framework. So if we'll talk a bit on the marketplace. I don't know how much you're familiar with that, but in Israel we have one clearinghouse that acts as the only formal trading floor. I know Shmuel now does something about trading floors on FX, but it's one clearinghouse acting as one trading floor. It's a monopoly. And basically, we don't have, for example, an OTC market for corporate bonds. What you're used to have here in the States, the OTC market, which is so lively, and it's so easy to fund. Companies are its accessibility to companies is quite high. We don't have that in Israel. So A, the marketplace. I think one issue to address. B, the liquidity. Well, guys, there is none. If something 2008 taught us that liquidity is very important for pricing, of course, the correct pricing, and to attract investors. In my view, the pitch of low liquidity, low volatility is not such a great pitch. I think it's very good for local institutional investors because we can show high performance with low VAR. But it's not such a great pitch when you want to attract international investors. So if you go to slide 46, you can see in equities, for example, a drop of 50% in liquidity. If you go to slide 47, you see there's no IPOs in 2012, 2011. And if you go to slide 48, I went to Bank of Israel. Bank of Israel made some kind of a study trying to analyze whether we were in line with other markets or not, and then normalize it to market value. And guys, we are not. There is a problem. There is a problem of liquidity that cannot only be explained, but what is happening in the world. Now, Roger, I looked at your slides. You have some background slides. And some of my friends, before I arrived here, I made some of an unacademic survey, which, you know, you just pick up the phone and ask some of my friends what they think. And they took great comfort in your slide 24. Slide 24 shows that per capita we have enough companies in Israel, 4 times more than in the States. But slide 27, again, I'm stealing your slides, Roger.
Actually, these are Glenn's.
I
don't
know who's them. Slides, but I've seen them. They are great. Slide 27 shows, look, we are a growing economy. We heard Mr. Steinitz. We are a growing economy. Why the number of companies in the capital markets are dropping? Look at the numbers. Basically, on slide 21, you can see that we are like in an emerging market. We have a bunch of real estate companies, banks, and one Teva. Iskar, $10 billion company, was not traded in the stock exchange. Why is it so? I think this is a problem, and I think this is a bit of a vicious cycle. Because once you don't have liquidity, you don't have interest, and then again, international money won't step in because of risk managers, and etc. Now, I want to put slide 51. Although it's slide 51, please. Although it's Oded's area of expertise, look, this is the structural change. In 10 years. The pension funds would double themselves. They would double the economy. So it doesn't mean that the capital market would benefit for that. It means that the saving would double. Now, why is it important? Because in my opinion, it has 3 major problems that can infect the capital market. A, concentration. We are down to 2 little players. We are now down to 8 players. I think Oded would say 100. I would argue 8. And we can argue all day long. But we are down to 2 little players because economy of scale, regulation, and et cetera, we have a concentration risk. 2 little players. 2, free float. You in one of your slides, 31, it is shown that as if free float in Israel is getting better. But it's not so. It's an illusion. Because what those institutional investors does, the strategy is buy and forget. Because if you have those enormous sums of funds that are pouring into your direction, you have to buy and forget because you have so many problems how to deploy your funds. You forget it. So you have free flow, but the liquidity is gone. And 3 is go abroad. Oded here, rightly so, encouraged the institutional investors to diversify and to go abroad. What happens is that when we try to fund very small companies, 10, 20 million, they don't move the needle to those investors. And because they don't move the needle to those investors, and because of the concentration within them, we have a problem that we have to address. And the fourth topic, and I'll be done after that, and here I have to be very careful, is the regulatory framework. Now I have to be careful because 66% of the financial regulators are sitting here with me. Now I have to go back to Israel tomorrow and I have to be home. So I'll be careful and I'll be polite.
Just be accurate.
And accurate. We need to have, I think we need to have a regulatory macroprudential framework. And we need to have regulatory certainty. Now, again, I'll be polite and I'll be delicate. So I would quote what Stanley Fischer said. Stanley Fischer said in one of the panels he was in Israel, he said, the Israel economy has two doctors. He said, the Ministry of Finance and Bank of Israel. Sorry, Shmuel, he didn't mention you. He said, Ministry of Finance and Bank of Israel. And I hope they will get along. Okay, this is what he said. Now, if I'm taking that as a metaphor, my point of view is that we have 4 regulators, 4.5, because sometimes Tel Aviv Stock Exchange believe itself to be a regulator. So we have 4 regulators. Some of them bring experimental drugs to a patient not being ill to begin with. Now, and in my experience with international money and investors, they feel that some of the drugs are too advanced. Some of the ideas are very smart, but they are not always coherent. Now, I'm all for smart, coherent regulation. Really, I'm all for it because I'm a player in the market and I want to win due to competence, not anything else. So I'm all for smart and coherent regulation. But it has to be smart, and it is. Those guys are the greatest, really. They're lovely people.
This is where you're careful.
This is where I'm careful, no. They're good, honest people.
Too late.
No, it's okay. They know my opinion. So it has to be smart, and usually it's smart, but it has to be coherent. It has to be coherent. If it's not coherent, then as an investor, you fall between regulation. And I think just for an example, we have now all this debt settlement in Israel, and I remember asking Shmuel in one of our meetings, whom should an institutional investor vote for? He should vote for his portfolio, not always for the company, either the bond or the equity. This is a problem.
This is the regulation.
Yeah. Now, the regulation says you have to vote as not for your portfolio, but you have to vote either you are an equity holder or a bond. No. Otherwise, you have conflict of interest, and we are left with dodgy fringe investors that are voting. This is what happens in the end. Now, we have solution for all that, but we have, of course,
let's hold off on that for a sec, because I think that next time I'd like you to be more forthcoming with your views, because I think that holding back doesn't do anyone any good. I'd like to give Oded and Shmuel a chance to respond. Maybe we'll start with you.
We are good friends.
We're very good friends. Yeah. We had dinner yesterday night. She didn't tell me anything what she was going to say today. But what's kind of funny, it reminds me of the guy who went and asked for an eye and ear doctor. And he said, no, what do you mean an eye or an ear doctor? It's either an eye doctor or an ear doctor. He says, no. What I hear is not what I see. I don't know, You're complaining about concentration in the long-term savings? I mean, we should talk about...
I want it to be interesting.
We should talk about banks first, no? I mean, I think concentration with the banking industry dwarfs concentration. But you have to put things in perspective. We had a review from the IMF, spent 3 months reviewing the regulators in Israel, the SEC, us, the banking regulator. And we actually got very good grades. In fact, we got a grade that is higher than the US, higher than Britain. So we are very proud of it. But one of the things that the guy from the IMF said, he said, I don't understand why you have 100 institutional bodies in Israel. A country the size of Israel should have at most 5. And I think it's an issue. And I think regulation, you're right, we should think about regulation globally, but I want to put it in the perspective of Dodd-Frank, 1,200 pages. And this comes at the heels of Graham and Dodd, 900 pages, which was, what, 5 years before? 4 years before? We never even come close to that. We're not there. We're doing our best to have regulation that is consistent. It's not always. We're doing our best to have regulation that is modern. It's not always. We're trying to be consistent with global regulation requirements because eventually we want Israel to be a global player. But it's a process. The world all over is looking at what happened and what they learned from the crisis in 2008, 2009. The rules are changing and we're changing them too. And you're welcome to help us.
It's, again,
Let's get Shmuel.
My mother used to say that when two Israelis never meet together, and they don't have a mutual acquaintance, that means that they did not talk enough time. And the reason I'm saying is because we all know each other, and we all talk about these things. But we Israelis tend to criticize ourselves. I don't know if you know it, but more than anyone else. So I want to give you a careful criticism of the things you said. I just want to say I'm going to do it. I'm going to do it in short. The first thing. I did not prepare a slide, but I know the numbers. Indeed, there were no IPOs last year. But if you look at IPOs around the globe, in the US, UK, Western world, number of IPOs reduced dramatically. The other figure that you have to take into consideration when you look around the globe, number of delistings grew dramatically. So we're not that different from other countries. Now about slide 62, about smart and coherent regulation. One of the things that we are doing, and all regulators are coordinated, although it's not formal coordination, we do coordinate. One of the things the Israel Securities authorities, securities regulators, did, we came up with a roadmap for the next 3 years, where when we talk about regulation certainty, that's where we are. We know for the next 3 years what are we going to do in terms of regulation. We want to talk about the regulation, reducing the burden of regulation. And we want to talk also about market development, because we think that as regulators, we have to focus also what do we have to do to infrastructure that will be good for the market. In slide 63, let me give you just an example. One of the things, and one of the things that probably all heard, we have a lot of R&D companies, and their contribution to growth is enormous. But still, one of the things we found is that there are a lot of R&D companies in their more mature stages where they exit and look for funding their continuing operations, and usually they do it, almost always they do it with foreign money. They don't stay in Israel because they don't find the funding. So one of the things I did is I nominated a public committee that is about to submit its recommendation in the next 2 weeks. And this recommendation aim at promoting R&D investment in public company, meaning that we want to create an infrastructure so that these companies will have sources of funding in Israel. And to do that, we've done a number of things, not only creating venture capital We want to provide liquidity to institutional investors. We want to talk about crowdfunding to investors. We want to do it, although I know that there are talks in the United States to do it, but we are going to do it in Israel, in particular regarding R&D companies. And to do that, we acknowledge the fact that there is almost an agreement with the tax authority of creating tax investments, of easing requirements in corporate governance and tax listing rules, and et cetera, and et cetera. And the last thing, again, with the criticism, slide 64, this is what the things that Oded was talking about. On the left-hand side, we are ranked 6, Oded said it, and I'll prepare the slide for that. OECD mentioned us as one of the most elaborated system disclosure and review. When it comes to the legal system infrastructure, we are really in the top level. And the FSAP, the IMF, when we were in Israel, ranked us number 1 in terms of fully implemented disclosure requirements and so on. So we think we are doing a pretty good job.
I told you you're smart.
We're almost out of time. Oh, okay, great. In that case, actually, Dave, could I? We just heard about some of the efforts that the government's making to keep startups and less mature companies within Israel, as opposed to expatriating a lot of the IP and the jobs and so on. You've been fairly successful at doing that, but I know there have also been some challenges. Maybe you want to talk a little bit about other things that might be helpful, or your experiences there.
Right. So everybody understands that the high-tech industry in Israel is really, really important for the economy. There are probably around 5,000 startups in Israel now. And people talk about the exits, but they forget that there is a long way until companies reach the exit. And the biggest problem with Israeli companies is that they don't have a local market, right? So Israeli companies typically think that their market is abroad, and it's very difficult to start a company. Typically the entrepreneurs are the first salespeople of the company. So they start a company in Israel, and then they need to go and sell it abroad. And selling abroad when you're based in Israel is very difficult. And that's one of the factors that affect the success rate of Israeli companies. And that's one of the reasons that many of the Israeli companies don't succeed to become big fast enough. And then when they don't become big fast enough, then the level of enthusiasm and the pressure from investors to exit is growing. And that's one of the factors that affect the high-tech industry. So one of the issues that the government can do to help Israeli companies is to help them with having a local market. And when I say local market, I compare it, for example, to Korea, right? So, Korean company, of course, has huge market internally. So when a Korean company starts, they have huge market to sell. But on top of it, the Korean government is helping Korean companies. So not only they have the advantage of a big local market, but they also get huge advantage from the Korean market. And we can have a long seminar about what Korea does for its own local companies. We don't have time for this. But let me just give you a simple example. So I'm thinking about my company. When my company needs to buy some software or hardware, or a certain product, and we debate if we should take a product from an Israeli company or Microsoft or HP, right? All the big companies always have something similar. So you can imagine what the IT of my companies will do. They would, their tendency to prefer an international company is obviously bigger than helping an Israeli startup. So let me tell you, there is a local market, okay? Israeli companies that sell B2B have a big market. There are many, many companies in Israel that need to buy technology. So the reason they don't have a local market is because they don't get help from the Israel to sell to local markets. In fact, the government has it seems like the opposite opinion, that they need to bring international companies to Israel by subsidizing them, sometimes on account of local companies. And, it doesn't help the local companies grow, right? So I think they have to take a different approach. They have to create some tax breaks to companies that buy from Israeli companies. They have to, find some subsidies that can help companies. So you can imagine if my IT companies would have a tax break when they buy from an Israeli company, the same software than from Microsoft, then obviously they will prefer the Israeli companies. And that's how we can help the Israeli companies have local market to start with. And once they become big enough, then they can go abroad and be more successful. So I think it's a key factor to take into account. Everybody wants to encourage the industry, and the government will have to intervene. It's very, very difficult to do it without it. And I can tell you from my experience that, being in Israel and having, we have now 12 offices, but at the beginning people used to travel a lot. It's very difficult to sell abroad when you're based very far.
Okay, I think we're actually over time, but I think it would be good to take a few questions if there are any in the audience. There's a microphone floating around somewhere, a hand in the back.
Hi, my name is Victoria Solchenko. Thank you so much. This is a wonderful panel. Do you guys have an Institute of Accredited Investors, as the United States has?
Accredited investors?
An Institute of Accredited Investors?
Yeah, well, in the United States, in order to invest to the private company, you have to fit some certain criteria. It calls Regulation D. So you have to have an income of at least 200K and 1 million in liquid assets. So you mentioned crowdfunding, and that's the problem with giving a green light to equity-based crowdfunding. So I was wondering how this in Israel.
Absolutely, we have it's more or less the same. The same. It's not as broad definition as it is in the U.S., but we have accredited investors. All institutional investors are accredited investors. And there is also a definition of a certain income. It's not as broad as it is in the U.S., but there's certainly a definition of accredited investors. And I think 2 years ago, this definition was broadened to individual investors who have the expertise or the money to be considered accredited investors. It has to do with certain level of income or to what extent you are active in the market. That's also a parameter.
Other questions?
For your regulatory bodies, do you have anyone who does an economic analysis of your regulations and that looks at regulations and looks at the companies that are out there working and says, this will be the economic impact of enforcing this regulation?
We try to do cost-benefit analysis. The truth is that it's very easy to estimate the cost. It's nearly impossible to estimate the benefit. When we try to understand what it means to have full disclosure, how it improves trade and benefits the economy, it becomes tremendously complicated. I've talked a lot about doing this with colleagues, different conferences globally. It's not uniquely a problem of Israel. It's a problem. It's a global problem that we understand somehow. We can estimate the costs, but we're not sure about estimating the benefits of regulation. What we do try, and this is sort of learning by doing. We look what is done globally. We try to estimate the impact on how people will behave. We try to assess what the equilibrium may look like after the dust settles. It's in lieu of benefit analysis, but we try to take it into account. One of the things that Shmuel talked about, and we're doing the same thing, is looking at we're in the midst. One of the things that I started when I took the position, is a process where we're looking at all our regulation from A to Z, codifying it, structuring it, comparing it to what's the global custom is, and trying to build a structured book of regulation that includes everything that we think is needed and excludes stuff that is not needed. Do we do a good job? I hope. In 10 years, I'll be able to tell you.
Jimmy Dimon asked Ben Bernanke once this question. Jimmy Dimon asked on a panel Ben Bernanke, and they asked him, do you know because of the Dodd-Frank? You know, the Dodd-Frank is like 700 times the Bill of Rights of the Americans. So now he asked Ben Bernanke once this question, and Ben Bernanke said it wasn't nice like Oded. He said, frankly, I don't have an idea.
Shmuel, did you want to?
Yeah, just a quick response. Personally, I believe in cost-benefit analysis, but I don't believe in quantitative one. The way we did it and the roadmap we published is what we believe is that we have to listen to the market and we have to see where the burden is. And what we did was sitting with all supervised entities, asking what can we do to lower that burden, and see what we see if we can make our contribution. That's what we did. So to that extent, we did a very thorough job, and like Oded said, I think all regulators have that in mind.
Okay, we have time for one more question.
Great. Well, we want to thank this excellent panel.
Thank you very much.